Well, let's go to the dramatic news today that Victoria has pulled out of hosting the 2026 Commonwealth Games. In short, Premier Dan Andrews is admitting that the state really can't afford the $7 billion bill, and that's very much inflated, even though it could have been scaled back. That's according to the Commonwealth Games Committee.
I will not take money out of hospitals and schools in order to fund an event that is 3 times the cost as estimated and budgeted for last year.
But it's not the only thing that Victoria's pulled out of. The popular Trainlink project between City and also the Tullamarine Airport, that's already been dumped yet. The $125 billion and growing suburban railway loop, well, that continues against some advice. Victoria, you see, has a pipeline of $120 billion of other infrastructure projects, which many say is unaffordable. John Manning is the Senior Credit Officer for Moody's Investor Services, who's warned that Victoria's credit profile is weakening. Always good to chat to you. Just explain the state of Victoria's finances right now that might have led to this decision about the Commonwealth Games.
Yeah, thanks, Ross. Great to talk to you again. I think one of the key things that Victoria suffered is still it's effectively running long COVID at the moment. Before the pandemic came out, up until last month, its debt has increased by over $105 billion. And if we take that over the next 3 years to when the Commonwealth Games were scheduled to commence, our projections were that the debt was going to increase by a further 48%. So today's announcement really doesn't change very much in the context of the broader debt profile. But one of the challenges the state's had is not just dealing with the economic disruption and the higher expenditure from the pandemic disruption, but equally the significant investment or infrastructure spending program that you touched on earlier. That's really going to be a key challenge to deliver when all states and territories are delivering large, if not record levels of infrastructure spending.
So we just had a look there at really the proportion of debt across the various states. We sourced it from the WA budget, oddly, but it shows that Victoria's debt position compared with its economy is going out to 200% as compared with the next worst, shall I say, of New South Wales going out to around 120, 130%.
Yeah, this is one of the challenges, and we don't see the debt profile or the debt burden of Victoria stabilising until at least the end of June 2028. So this is considerably beyond the forward estimates period. And it's a challenge that's not just driven by infrastructure spending. There are structural challenges as far as the basic operating balance within the state that they're continuing to work through. But we've had this element of quantum entanglement with the states and the Commonwealth over recent months and years, where we're seeing a longer draw on the health cost of the states, and particularly as GPs do less bulk billing, there's less availability of GPs. More people are turning up to hospitals, and that's increasing the structural cost base of the states. Align that with some underlying inflation pressures. That'll flow through to wage pressures, and wages and salaries you'd normally expect to be sitting between 45-50% of the cost structure of the public service. And then on top of that, we have rising interest rates. And when your debt burden is increased already by $105 billion and projected to increase by a further $65 to $70 billion in the next 3 years, it's the funding of that at today's interest rates, which is really going to put a challenge on debt affordability.
So today we heard, and you heard it there, Dan Andrews saying this is really all about making choices about what is important for that state right now. So are there other hard choices that need to be made in regards to which infrastructure projects go ahead and which basically are either scrapped or deferred?
I think it's appropriate to give credit where it's due and to focus on important initiatives such as investing in social housing is the right thing, ethically it's the right thing, and financially it seems to be a much better investment for the long term, because the social disruption that we're seeing through the rental crisis is really starting to play challenges towards the household consumption and household confidence levels. That said, there is the 90-day Commonwealth review on large infrastructure projects. So we're waiting eagerly to see what projects will progress. But at the same time, it's not necessarily just what goes ahead, but the profiling or the sequencing of those projects, which is really going to be the key driver of debt levels going forward. We've had significant levels of underspend by the states in the recent budgets when it comes to their targeted infrastructure spending. That's not necessarily because they're being more conservative. A lot of that is reflected in construction backlogs. So it's a fine balancing act in an environment where construction costs and labour markets remain very tight. Balancing those factors in debt-funded infrastructure spending is a key driver.
I'll tell you, John Manning from Moody's, always good to chat to you. Many thanks for your time today and those insights into Victoria.
It's a pleasure.